In this video, we're going to be looking at delivery van adjustments. So this comes up in every single sole trader and company final account. With regards to manufacturing final accounts, you would see a plant and machinery adjustment. So we're going to take a look at all of the ones that have come up since 2002. So basically what's going to happen here is a business owner wants to go into Ford or whatever other dealership it might be, and they want to drive away today in a new van. Okay, how they're going to do that is they're going to bring their old van in, and then they're going to trade that for this new van that they want to drive away in. So a few things are going to happen in the accounts. There's going to be 3 things happening in the trading profit and loss and 2 things happening in the balance sheet. So in the trading account, a lot of the time, in every single one so far, what has happened is that the bookkeeper has accidentally treated the purchase of a motor car or a delivery van as the purchase of trading stock. So obviously this company does not sell vans then if we're told that it was incorrectly treated as purchases. So that's just happened in every single one to date, but like watch out, it might not happen this year. But if it's incorrectly treated as purchases, what we have to do, we have to correct the purchases if the check given to the car dealership was mistakenly treated as purchases instead of motor van. We have to record the depreciation charge for the year on all vans in selling and distribution expenses. And then in selling and distribution expenses, we would have to record if there was a loss on the sale of delivery van, or if there was a profit on sale of delivery van, we'll have to record that under add operating income. In the balance sheet, we're going to have to say what the cost of the delivery vans are at the end of the year. And we're also going to have to calculate the accumulated depreciation on all the vans held at the end of the year. So let's get into it then. So 2021 question 1A, sole trader final account, it was adjustment number 3. So it says, provide for depreciation on delivery vans at the annual rate of 20% of cost from the date of purchase to the date of sale. Note, on the 31st of the 3rd, 2020, a delivery van which had cost €42,000 on the 30th of the 9th, 2016 was traded in against a new van which cost €67,000. An allowance of €11,000 was given on the old van. The cheque for the net amount of this transaction was entered in the bank account but was incorrectly treated as a purchase of trading stock. These were the only entries made in the books in respect of this transaction. Okay, so let's get started. So the first thing that we'll do, we'll fix our purchases figure. So we have to take a look at how much was paid for the new van. So when the sole trader rocked in and wanted to drive out with the van worth 67, they got an allowance of 11 from the dealership. So the cheque for the net amount would have been 56,000 then, and that was incorrectly treated as purchases, so we're going to take that out of the purchases account. Next thing we'll do, we'll calculate the cost of the vans on the 31st of the 12th. So how much were the vans at the end of the year? So you sold a van worth 42 and you got one worth 67, so we minus 42, add 67, and the cost of our vans then at the end of the year, 405,000. Our depreciation charge for the year, we're going to have to look very carefully at the date at which we traded in the old and bought the new. So for 3 months, we had 380 was the cost of our vans, and then for 9 months, 405,000 was the cost of our vans. So it says, provide for depreciation delivery vans, annual rate of 20% of cost from date of purchase to date of sale. Okay, so we're going to record depreciation of delivery vans in the selling and distribution expenses. So you see here, 380,000 by 20% by 3 over 12 is €19,000. And then we add that to 405,000 by 20% by 9 over 12 months, and that's €60,750. So depreciation charge for the year, 79,750. Okay, then we work out profit or loss on sale of the old van. So we've a good bit of working out to do here. So this is probably the first time I tell you to go to a workings page. So we have to look at the cost of old van, take away the accumulated depreciation on the old van. That will be then what the old van was worth at the time of sale or trade-in. and then we'll compare that to the allowance that we got, and that will be a profit or loss on sale of van. That should say profit or loss on sale of van. So the date, we bought it was 30th of the 9th 2016, and we sold it on the 31st of the 3rd. So we need to have a look. So 2016 we had it for 3 months, 2017 12 months, 2018 12 months, 2019 12 months, 2020 3 months. Altogether that is 42 months. So the cost of the old van was 42,000. Then we take away the accumulated depreciation. So that is 42,000 by 20% by 42 over 12. And that is 29,400 euro, giving us a net book value of 12,600. We compare that to the allowance of 11, and that is a loss on sale delivery van 1,600, which will go into our selling and distribution expenses in the trading profit and loss there. So that is 1,600 loss on sale of delivery van. Now what we'll do then to finish this adjustment off is we'll calculate the accumulated depreciation on vans at the end of the year. So what you have to do is you have to minus the accumulated depreciation on the van that was sold, okay, so 29,400, and you'll have to add the 79,750 depreciation charge for the year. So just take a note here. In these delivery van adjustments, when you buy and sell a van, you're going to have 3 figures in the cost bracket, and then you're going to have 3 figures in the accumulated depreciation bracket. So at the end of the year, the cost of delivery vans is 405,000, the accumulated depreciation is 120,350, and the net book value is 284,650. So that's the 2021 vans adjustment done. So now moving on then to 2020. So you see here the cost was 250 and the accumulated depreciation then is the difference between these two, so 64,000 euro there. So it was note 3 here in that year. So provide for depreciation on delivery vans at the annual rate of 20% per annum on cost from the date of purchase to the date of sale. Note, on the 31st of the 3rd 2019, a delivery van which had cost 48,000 euro on the 31st of the 10th 2016 was traded in against a new van which cost 64,000 euro. An allowance of 26,000 euro was given on the old van. The cheque for the net amount of this transaction was entered in the bank account but was incorrectly treated as a purchase of trading stock. These were the only entries made in the books in respect of this transaction. So practically word for word like the last year, but just different figures, different depreciation rates, etc. So here's our figures from the trial balance. The cost 250,000 and the accumulated depreciation 64. So we'll fix the purchases. So again, you know that the cheque for the net amount of the transaction, the cheque for the net amount that the business owner paid to the car dealership was treated in error as purchases instead of a delivery van. So how much was the cheque for? Well, it was the 64,000, which is the cost, minus the allowance 26, so it was 38,000 euro. So the purchases figure, you'll take whatever the trial balance figure is and minus 38,000 from that. You already will have the trial balance figure written in from step 2 in our complete and final accounts anyway. Okay, so that's fixed purchases. Next thing, we'll calculate the cost of vans at the end of the year. So hope you remember, we got rid of an old one worth 48 and we bought a new one worth 64. So we'll minus 48, add 64, and then the cost of vans at the end of the year, 266. Then we'll work out the depreciation charge for the year. So provide for depreciation on delivery vans at the annual rate of 20% per annum from cost from the date of purchase to date of sale. So remember, start of the year we had 250, that was the cost of vans. End of the year 266, cost of vans. So we just have to be careful what date we traded that in. So for the first 3 months of the year we had 250, last 9 months of the year we had 266. So 250 by 20% by 3 over 12, and then 266 by 20% by 9 over 12. We tot them up, we get 52,400. That depreciation delivery vans goes in selling and distribution expenses. So that is that. Then we'll work out profit or loss on sale of old van. So our formula is cost minus accumulated depreciation on the old van is equal to the net book value, so the amount that it was worth when it was sold. We compare that then to the allowance, and that tells us whether we made a profit or a loss. So it's very important. The cost of the old one was 48, and it was traded in on the 31st of the 3rd, 2019. And it was bought on the 31st of the 10th, 2016. So what we have to do, we have to work out how long did they have this van for. So for 2016, they had it for the 11th month and the 12th month, so 2 months. 2017, they had it for the whole year, same as 2018. In 2019, they had it for 3 months. So in total, they had 29 months they had that old van for. So to work out the accumulated depreciation on that old van, it's 48,000 by 20% by 29 over 12, which is €23,200, giving us a net book value at the time of sale of €24,800 there. We'll compare that then to the allowance of 26, and unfortunately they made, fortunately they got more than what it was worth. So they got 26, but it was only worth 24,800 according to their book, so it was 1,200 profit. So if it's a profit on sale of van, we're going to put it into add operating income there. So 1,200 goes into add operating income, and they're the three figures that are giving you the marks there. Okay, then lastly, we'll do the accumulated depreciation on vans 31st 12. So as I said when we were doing the last one, when we buy and sell a van, you're going to have 3 figures in your cost bracket, and you should have 3 figures in your accumulated depreciation bracket. So you're going to have to take away the accumulated depreciation on the old van that you sold. So you see it here, 23,200, and then you add the depreciation charge for the year then to that there as well. And that would be €93,200 then. And then in total, our vans under cost 266, accumulated depreciation 93,200, and then 172,800 net book value. These big blue things are just so that you'll see it a bit bigger, because the writing can be quite small, so there's no other reason for those big blue boxes there. Okay, right, so 2019 was slightly different. Company account Lincoln Limited, but delivery vans cost there 155, and then net book value 120, so accumulated depreciation of 35 there. Now this was different than the usual. Okay, so note 3, the cost of delivery vans is to be written off on a straight line basis over 5 years. A full year's depreciation is to be charged in the year of acquisition and none in the year of disposal. And delivery vans have a 5% scrap value on the original cost. Note, during the year, a delivery van which had cost 25,000 in 2016 was traded in for 14,000 against a new delivery van costing 40,000. The cheque for the net amount of this transaction was incorrectly treated as a purchase of trading stock, but was entered correctly in the bank account. This was the only entry made in respect of this transaction. Okay, so we're not told the depreciation rate for the year here. Back in 2019, when I was correcting this in the summer, I think I had nearly 400 papers to correct, and 3 people got this correct. So it was quite challenging for people. So we need to work out what is the depreciation rate for the year. Nobody could work this out, right? So the depreciation rate for the year is hiding in these first 3 lines here. So I'll just read it again. The cost of delivery vans is to be written off on a straight line basis over 5 years. A full year's depreciation is to be charged in the year of acquisition and none in the year of disposal. Delivery vans have a 5% scrap value of the original cost. Okay. So if the cost is 100% and the scrap value is 5%, after depreciation for 5 years has taken place, the depreciation must be 95%. If it has a 5-year lifespan, so depreciation for 5 years, we divide it by 5 and we get our rate of 19% per year. So only 3 out of nearly 400 people got that. Okay, so it was quite challenging, but as you can see there, it's actually very easy. Okay, but so you have to know how to do that for June if you see something like that again. Something similar came up, or something the exact same nearly came up in plant and machinery in 2021, question 1B, Connolly Limited, with the plant and machinery. So you had to calculate the depreciation rate in the same way. Okay, so we get started. So the exact same thing here happened with the purchase of trading stock. The business owner went in, they paid for whatever they needed to, whatever the check needed to be for it. They paid it to the van company, and they treated the check incorrectly as purchase of trading stock. So we'll fix the purchases figure now then. So it was traded in for 14,000. That was the trade-in value, but it was a new van costing 40. So the check would have been 26,000. So we fixed the purchases by taking 26,000 out of that. Then we get the cost of the vans at the end of the year. So hopefully, you know, they sold a van worth 25, they bought a van worth 40. So 155 minus 25 plus 40, that's given us a cost at the end of the year 170. Then we'll work out the depreciation charge for the year. So this is a bit different. Remember, it says a full year's depreciation is to be charged in the year of acquisition and none in the year of disposal. So we're not going to charge any of that 25,000, that van there that we sold during the year. There's no depreciation charge on that for the year, but there is a full year's depreciation charge in this 40. So it's the 170,000 euro there. So 170 by 19% is 32,300 euro there. Then we'll work out profit or loss on the sale of the old van. So again, we'll have a look. The old van cost 25,000. Okay, and remember it says a full year's depreciation to be charged in the year of acquisition and none in the year of disposal. So when did we acquire it? It was bought during 2016, so a full year there. 2017, a full year there. But then during the year, we're doing this for the year 2018, so there is no depreciation charge there. So that's just been depreciated for 2 years. So we'll work out the accumulated depreciation here. 25,000 by 19% by 2 years is 9,500. That gives us a net book value at time of sale, 15,500. We compare that to the allowance of 14,000 and that gives us a 1,500 loss on sale of the delivery van. So 1,500 here, and then that is that. Last thing we have to do then is the accumulated depreciation on vans. So as I said, we're going to have 3 figures here as well because we bought a delivery van and we sold one. So we're going to minus the 9,500, which is the accumulated depreciation on the old van, and then we will add the 32,000 euro for this year. So overall we're going to have a cost 170, accumulated depreciation 57,800, and net book value 112,200. Okay, moving on then to the 2017 question. So sole trader M. Mullen. So it was adjustment number 2 here. So provide for depreciation on delivery vans at the annual rate of 15% of cost from date of purchase to date of sale. Note, on the 31st of the 3rd, 2016, a delivery van which cost 40,000 on the 30th of the 9th, 2012 was traded in against a new van that cost 48,000 euro. An allowance of 18,000 euro was given on the old van. The cheque for the net amount of this transaction was entered in the bank account but was incorrectly treated as the purchase of trading stock. These were the only entries made in the books in respect of this transaction. Okay, so let's get started. So again, a mistake with the purchases. So to fix the purchases then, we'll find out how much the cheque that was given to the dealership. So the new van was worth 48 and the allowance was 18. So the cheque was for 30,000. It's incorrectly treated as purchases, so we'll minus it from purchases to fix the purchases figure. Now we'll do the cost of vans at the end of the year. So we sold a van that was worth 40 and we bought one that was worth 48. So minus 40 plus 48 gives us a new cost now of 158. Then we'll do the depreciation charge for the year. So the trade-in happened on the 31st of the 3rd. So for the first 3 months, we had vans that cost 150. For the last 9 months, we had vans that cost 158. And we have to do that based on our depreciation rate of 15%. So first 3 months of the year, 150 by 15 by 3 over 12 is 5625. Last 9 months of the year, 158 by 15% by 9 over 12, 17775. So 23,400 altogether there. So then we need to work out the profit or loss in the sale of the old van. So cost of the old van was 40,000. Okay, and we had it from the 30th of the 9th, 2012 to the 31st of the 3rd, 2016. So for 2012, we had it for 3 months. 2013, we had it for 12 months. 2014, we had it for 12 months. 2015, we had it for 12 months. And 2016, we had it for 3 months. All together there, that's 42 months. So to find the accumulated depreciation there, 40,000 by 15% by 42 over 12 is 21,000 accumulated depreciation. That gives us a net book value at time of sale of €19,000. When we compare that to the cheque of 18,000, that gives us a loss on €1,000. So €1,000 loss there. So loss on sale of delivery van, €1,000 there. Lastly then, we'll do the accumulated depreciation on vans at the end of the year. So as you know, there should be 3 figures here. We'll minus the depreciation on the sold van, which you see here, and we'll add the depreciation charge for the year. So altogether, we'll have a cost at the end of the year, 158,000. We'll have accumulated depreciation, 67,400, and we will have net book value, 90,600. So that's the 2017 question done. 2015 Melba Limited Company account. So our delivery vans cost 250, and then accumulated depreciation then would be 80,000 based on that net book value of 170. So our adjustment is note number 5 here. So provide for depreciation on delivery vans at the annual rate of 15% of cost from the date of purchase to the date of sale. Note, on the 31st of the 3rd, 2014, a delivery van which had cost €30,000 on the 31st of the 3rd, 2011 was traded in against a new van which cost €56,000. An allowance of €8,000 was given on the old van. The cheque for the net amount of this transaction was entered in the bank account but was incorrectly treated as a purchase of trading stock. These were the only entries made in the books in respect of this transaction. Okay, so let's get going. So we've got our figures from the trial balance here. First, we'll fix our purchases. So the new van cost 56, the allowance for it was 8, and the cheque for the net amount was incorrectly treated as purchase of trading stock. So to fix the purchases, we minus 48,000. To get the cost of vans at the end of the year, we will minus the cost of the sold van and add the cost of the new. So the sold one was minus 30, the new was 56. So minus 30 plus 56 gives us a cost of 276. Then we have a depreciation charge for the year. So we've got a couple of different figures here. Start of the year, we had vans that cost 250. End of the year, vans that cost 276. But the trade-in happened after the 3rd month. So for the first 3 months, we had 250 by 15% by 3 over 12 is 9375. And for the last 9 months, it's 276 by 15 by 9 over 12, that's 31050. So altogether there, 40,425. Then we have to work out, do we make a profit or loss in sale of old van? So the old van was traded in 31st of the 3rd, 2014, and it was bought on the 31st of the 3rd, 2011. It had cost €30,000. But how long did we have it for? So 2011, we had it for 9 months because it was bought on the 31st of the 3rd. We had it for all of 2012, all of 2013, and 3 months of 2014. So that is 36 months altogether. So let's find out the accumulated depreciation there. So 30,000 by 15% by 36 over 12 is 13,500 accumulated depreciation, which gives us a net book value of 16,500. We'll compare it to the allowance of 8, and that gives us a loss of €8,500. Last thing we have to do then, accumulated depreciation on vans on the 31st of the 12th. So we will have three figures here. We need to minus the accumulated depreciation on the sold van, which was 13,500, and we need to add the depreciation charge for the year, and that gives us 106,925. So overall we've got cost 276, we've got accumulated depreciation 106,925, giving us a net book value at the end of the year 169,075. Okay, looking at 2014 then, this is a sole trader, Mike McMahon. So the cost was 90 and the accumulated depreciation was 12. Okay, so 90 and 12 going there. First thing we'll do, it's the exact same. So provide for depreciation on vans at the annual rate of 10% of cost from date of purchase to the date of sale. Note, on the 31st of the 3rd, 2013, a delivery van which cost €40,000 on the 30th of the 9th, 2010 was traded in against a new van which cost €46,000. An allowance of €16,000 was given on the old van. The cheque for the net amount of this transaction was entered in the bank account but was incorrectly treated as a purchase of trading stock. These were the only entries made in the books in respect of this transaction. So again, a mistake in purchases. So how will we fix that? Well, it's the cost of the new van minus the allowance that they got for it. So the cheque would have been 30, incorrectly treated as purchases, so we will minus that from purchases. We'll take it out of purchases. Cost of vans at the end of the year, we have to show that we sold one that was worth 40 and we bought one that was worth 46. So minus 40 plus 46 will give us a cost at the end of the year, €96,000. Then we'll work out the depreciation charge for the year. So the trade-in happened after the 3rd month. So for the first 3 months of the year, we had €90,000 worth of vans, and the last 9 months we had €96,000 worth of vans. So 90,000 by 10%, which is the depreciation charge, by 3 over 12 is 2250, and then we have 96,000 by 10% by 9 over 12 is 9200. So altogether there, 9,450 depreciation on delivery vans. Then we'll work out profit or loss and sale of old van. Okay, so the cost of the old van was 40,000, We bought it on the 30th of the 9th, 2010, and we sold it on the 31st of the 3rd, 2013. So cost of old van, 40,000. We had it for 3 months of 2010, the whole year for 2011, the whole year for 2012, and then 3 months of 2013. So total we had it for 30 months. So 40,000 by 10% by 30 over 12 months is €10,000. That gives us a net book value of €30,000. We compare it to the allowance of 16,000 that we got for it, and that's a huge loss there of €14,000, which is going to go in selling and distribution expenses. So your three figures there for your workings, 40,000 minus 10, and then compare it to the allowance of 16. Okay. Then our last thing to do, accumulated depreciation of vans. So when we get rid of a van and we have the depreciation charge for the year, we are going to have three figures in this second bracket here. So we take away the accumulated depreciation on the old van, which was €10,000, and we add the depreciation charge for the year, which is 9,450. In total, that's €11,450. So the cost is 96,000. The accumulated depreciation is 11,450, and net book value 84,550. Then we've got 2012, which is West Limited. So they had delivery vans 260,000, and they had accumulated depreciation then of €80,000 because the net book value was 180. So it was note number 5 there. Provide for depreciation on delivery vans at the annual rate of 10% of cost from the date of purchase to the date of sale. Note, on the 31st of the 3rd, 2011, a delivery van which had cost €28,000 on the 30th of the 6th, 2015 was traded in against a new van which cost €54,000. An allowance of €6,000 was given on the old van. The cheque for the net amount of this transaction was incorrectly treated as a purchase of trading stock. This was the only entry made in the books in respect of this transaction. Okay, so there's your figures there from the trial balance. First thing we'll do, we'll fix the purchases figure. So the cheque was 54, the allowance was 6. So the cheque was incorrectly 48,000. It was incorrectly thrown into purchases account. On the debit side, so we'll take it out, so we'll minus 48,000 euro. Now, cost of vans then, we have 31,000, or on the 31st of the 12th, we had 54,000 was the new van and the old one was 28. So from our 260, we'll minus the old 28, add the new 54, and that gives us 286,000 euro cost of vans. Now we have the depreciation charge for the year. So it was traded in on the 31st of the 3rd. So for the first 3 months, we had vans that cost 260,000 euro there. Sorry, that should say 260,000 euro. That's a typo there. So we had 260,000 euro. The cost at the end of the year, we had 286,000 euro. Okay, so we need to remember that. So we have traded it in after the 3rd month. So we have here 260 by 10%, which is the rate, by 3 over 12, 6,500, plus 286 by 10% by 9 over 12, that's 21,450. So in total, 27,950,000. Okay, so that is that. Then we'll work out, did we make a profit or a loss on the sale of the old van? So we have to think about, when did we buy the old van? So we bought it on the 30th of the 6th, 2005. We sold it on the 31st of the 3rd, 2011. So the old van cost 28,000. Okay, but how long did we have it for? In 2005, we had it for 6 months, because we had it at the end, got it at the end of the 6th month. 2006, we had it for the whole year. 2007 whole year, 2008 whole year, 2009 whole year, 2010 whole year, 2011 we had it for 3 months. Altogether, that is 69 months. So what is the accumulated depreciation then? 28,000 multiplied by 10% multiplied by 69 over 12 is 16,100 euro there. That gives us a net book value of 11,900 euro. If we compare it to the allowance of 6 that we got, that's a huge loss there of 5,900 euro. Last thing we'll do then, accumulated depreciation on vans at the end of the year. So again, we're going to have 3 figures here. We're going to take away the depreciation on the sold van, 16,100, and we're going to add the 27,950 for the year. That'll give us 91,850 altogether. So under cost, we've got 286,000. Under accumulated depreciation, we've got 91,850, and under net book value, we have 114,150. Okay, so there are 7 left. Okay, so I'm just going to actually be quiet, and I'm going to allow you guys, you need to practice this. This could be up to worth 20 marks in an exam. So I'm going to be silent. Everything that you need will be up on the screen if you want, but now you're going to be stopping and pausing and looking and checking against your own. So I would recommend now that you attempt 2010 and then 2008, 7, 6, and then we jump to 4, 3 and 2. So just pause the video now and work on the next few there yourself. So I'm just going to go through it silently then myself. So just pause the video when you need to. Okay, so hopefully you got that for the 2010 one. So now we're going to look at the 2008 one. So pause the video again and see how you do. This here should be 12. Okay, so that was 2008. So let's try now the 2007 question. Okay, so that was 2007. Hopefully you went well. Now we're going to try the 2006 K. Kelly question. Okay, so that was 2006. Again, hopefully you got on all right there. We'll keep practicing then. 2004 Kerry Limited Company account. Okay, so that was 2004. Let's try 2003 now. All right, and then the last one, 2002 Turner Limited Company account. Okay, so that is all of the delivery van adjustments going back to 2002. So you could see there that you practiced 2010 to 2002 without me talking through it, but all the answers should be in there. You should be able to, at that stage, you know, calculate do the workings and have the figures. You might have made a couple of mistakes. The most common thing that students do is calculate the number of months incorrectly. So I definitely would suggest when you're doing the depreciation and you're doing the profit or loss and sale, you know, that you count out the months, write them down and somewhere on a page somewhere. It's very, very, very common that people get that incorrect. Okay, so be very careful with the months. And then that's it. That's the delivery vans adjustment done. It comes up in every single sole trader and company final account. I would say to you again, take particular care, have a look at the 2019 question again and be able to do that in an exam should you see it. And I would definitely highly, you know, expect for you guys to see it this summer.